Hello, ma'am. I am Krishan Singh Rathore with my team Srinjay, Ronak, Dipti, Richa, Arjun, Hardik, and Pratham are going to present on a topic financial services. In this presentation, we are going to talk about financial services, what are key players and regulatory bodies, how this sector is performing right now, how this sector is impacting Indian economy, what are the challenges and future trends. Financial service industry is the collection of organizations which intermediate and facilitate financial transaction of a individual and institutional investors from their source allocation activities through time. The types of financial services includes traditional activities and modern activities. In traditional activities, there is asset-based financial services and second, there is non-fund financial services. In asset-based financial services, there is lease financing, hire purchase, factoring, forfeiting, exchange trade funds, and etc. In non-fund based financial services, there is merchant banking, credit rating, stock broking, securitization, etc. In modern activities, there is project advisory service, capital restructuring, management structure and style, merger and acquisition, portfolio management, and risk management. Uh, in financial services, there are major companies which are State Bank of India, which is the largest public sector bank in India. SDFC Bank, one of the largest private sector bank in India, providing a wide range of financial services. LIC, state-owned insurance and investment company, the largest in India. Kotak Mahindra Bank, a private sector bank with a diverse range of financial services. Bajaj Finance, a prominent non-banking financial company offering various financial products. Uh, Indian financial system is regulated by Reserve Bank of India, SEBI, which regulates security market, Insurance Regulatory Development Authority of India, which regulate insurance industry in India, PFRDA, which regulates and promotes pension related activities in India, National Payment Corporation of India, which facilitate electronic payment and settlement system in India. Now Ronak will tell us more about how this sector is performing right now.
So now let's talk about how the financial service sectors are performing. In 2023, the Indian financial sector is doing well, with a number of sectors seeing rapid expansion and profitable returns. Some of the main points of interest are as follows. The banking sector. In 2023, the Indian banking sector experienced a robust upsurge in growth, propelled by elements like the strengthening economic climate, escalating credit demand, and robust capital position of bank. Profit in the industry are predicted to increase by more than 20% in the financial year 2023, and asset qualities has also greatly increased as well. Second, insurance industry. The insurance industry is expanding rapidly as well, with both the life and non-life insurance market doing well. In financial year 2023, it is anticipated that no non-life insurance premiums will increase by more than 10% and life insurance rate will increase by more than 15%. Now further will be explained by my colleague Pratham.
So, continuing capital good sectors. The government emphasizes on infrastructure development and the recovery of the industrial sector is also advantageous to the capital goods sector. The order book for the industry has grown dramatically and capacity of utilization is also rising day by day. Second, real estate sectors. Following a downturn, the real estate sector is slowly rebounding. Developers are starting new projects because they are increasing demand of houses. Nevertheless, the industry continues to face different type of obstacles like high real estate costs and protected project approval processes as well. Overall, It is anticipated that India's financial industry would continue to operate well through the end of 2023 and into the future as well. The industry is positioned to gain from India's strong economy expansion and increasing disposable incomes. Next will be continued by the other person.
Now I will talk about on impact on Indian economy. As India's financial services sector is poised to grow on the back of rising incomes, there has been significant government attention with increasing pace of digital adoption. With the pace of digital adaptation, we have got the biggest opportunities in financial services, like for example, joint ventures and investment rather than exports. As the companies are moving towards India by through joint ventures and investing in the country, rather we are exporting the services. As India's digital payment could pass uh, $1 trillion by 2030, according to Department of Foreign Trade and Affairs. Expected increases in FDI and FPI into Indian infrastructure has been rapidly advancing technologies, rising consumer expectations, and disruptive innovations will reshape the structure of the industry across the globe. It is very necessary to understand that FDI and FPI is building the infrastructure of the economy. And according to FDA, by 2035, India's five largest cities will have the economies of comparable size to middle income countries today. The countries who have the uh, middle sized population will have emerged five largest cities of India. The number of HNWI is forecast to triple to over 1.2 million by 2030, according to the recent FDA report. Uh, Please move forward the slide. Digital payment has grown to 500 billion dollars by 2020 and will pass the 1 trillion mark by 2030. As the Australian businesses could partner with the Indian financial services company in sectors that align with the competitive strength in asset management, general insurance, and fintech. By 2025, it has been told that digital finance is forecast to boost India's GDP by $950 billion and create 21 million new jobs. Rising incomes will drive demand for financial services across Indian brackets of India, including insurance and retail banking services. With adoption of new technologies and processes, including blockchain ledgers, could reduce the cost of managing loans. The people who are availing the loans or the companies who are availing the loans from the foreign companies could reduce the cost of that with microfinancing commercially feasible. It will also make the financially feasible for the commercial companies. As you can see in the chart, the GDP growth from 2019 to expected 2024. Thank you. Now, my next teammate will make to forward.
Talking about the challenges of financial services, firstly, the most significant challenge faced by the finance industry in India is non performing assets and bad loans. Various banks and financial institutions have struggled with mounting NPAs and leading to impact on their stability and profitability. It impacted the leading capacity and also hampers the economic growth. Second, large portion of Indian population still lacks the access of formal financial services. It is a challenge in particularly in remote and rural areas. Limited access to credit prevents the individuals and small businesses from realizing their potential. Third, rise in the fintech startups. It is a challenge traditional to the financial institutions. They offer innovative solutions which attract the customers and which is more convenient and efficient. Fourth, rapid digitalization of financial services in India is increasingly vulnerable to the cyber threats and data breaches. Rise in the online payments and digital wallets is also increasing the cyber crimes. Thus, cybersecurity measures and protecting the customer data become the top priority for the banks and financial institutions. Fifth, finance industries operate within the complex regulatory framework in India and complying with regulations and guidelines with the various regulatory bodies like RBI and SEBI, which is a significant challenge for the financial services. Lastly, finance industry in India faces a shortage of skilled and professionals with necessary expertise.
Rapid advancement and technology and increasing complexity of financial products require professionals and specialized skills. Over to the next teammate.
Can you please uh, shift the slide? Yeah, thank you. People usually confuse between fintech and financial services and took both the terms as the same, but there is a great difference between financial service and fintech. Fintech usually focuses on managing the client experience by providing various services like UPI and quick payments and all. Traditional financial service focuses on managing the risk, how a customer can manage their money, monetary assets and all. Fintech is a disruptive startup, whereas traditional financial service is an established institute established in various cities all across the world. Fintech is a digital first approach, which means fintech usually fintech is usually established as digital payments, whereas financial services are physical branches and offices. Fintech is a single regulatory and is very agile and flexible. Fintech has only a single regulatory which is known as KYC, know your customer. Whereas if we focus on financial services has strict regulatory system in which they have to maintain the rules and the guidelines which are being published by the RBI. If we see the future of fintech and financial services, technological advancement, fintech will continue to leverage emerging technologies like artificial intelligence, blockchain, and big data to offer new and more personalized financial services. Collaboration with traditional institution. Partnership between fintech startups and traditional financial institute will increase, allowing for adoption of innovation technologies within established banking system. uh, Financial inclusion. Fintech will play a pivot role in increasing financial inclusion by empowering, understanding, and bridging the gap between banking services and unbanked. Now, I would like to pass on my next colleague.
So now let's talk about the future of financial services. Firstly, the private business will explore innovative investment routes. So, innovative investment routes in private markets will enable companies to get in touch with various funding options and also grab the attention of a diverse cohort of investors. Blockchain technologies enables venture capitals and private equity firms to access new investment opportunity. They can create investment platforms providing new ways of private companies to raise capital. So next, AI and machine learning will determine the future of the finance. So AI and machine learning will become crucial in segments of the finance industry. AI can be used for financial forecasting, fraud detection, portfolio management, and and customer service. Machine learning can be used to automate as well as optimize compliances, credit scoring, and trading strategies. Next, the future of money. So the money will physical money will disappear or not. The digitization of money is forever altering our relationship with money to the extent that physical money could disappear entirely. If that sounds fair faced, consider that more than 600 currencies have disappeared in the last 30 years, and it's not unthinkable that more will either disappear altogether or be replaced by digital currency. And next is ESG investment will play a crucial role in changing the finance landscape. So ESG is basically environmental, social, and governance. Investment will play a vital role in modeling the future of finance. ESG factor will influence a company's financial performance and long-term sustainability. Hence, ESG consideration can significantly impact investment decisions and risk mitigation, generating long-term returns. And last one is, not the last one. Open banking will be the future of finance.
So customer can securely share their financial information with authorized and verified third party through open banking. Open banking can play a major role in changing the future of finance, as this grants access to customers to multiple financial products and services. These services include personalized financial advice, money management applications, and budgeting tools. And last one is cybersecurity will dominate the finance industry in future. Cybersecurity play a vital role in determining the future of finance. It protects and preserves sensitive financial information from any unauthorized source. Cyber attacks are increasingly in numbers. Vigorous cyber security measures can define against cyber threats and ensure a safer financial system. Some example of implementing cyber security in financial institution include firewalls, multi-factor authentication, incident response plan, and encryption. Now, my colleague Krishan will conclude the presentation.
I would like to conclude the topic. The financial service sector plays a pivotal role in the economy, providing essential functions such as banking, investment, and insurance. As technology continues to reshape the industry, digital innovation and fintech advancements are driving greater efficiency and accessibility. However, challenges such as regulatory compliance and cybersecurity must be carefully navigated. Overall, the future of financial services lies in a balance between embracing technological evolution and maintaining the trust and security of the financial transactions. Thank you.